Mondays? If you love Mondays too, drop it in the comments below. Everybody gets so pissed off, but Monday is the beginning of the week. We can step right into our income generating hours and get to work. So today's live, I want to get right into it because I like to go into a meeting with purpose and leave with direction. Got that from Layla Hormozy. We're going to be talking about asset-based lending because I get this question a lot. What is asset-based lender? And as director of funding at GRA Money and GRA Capital, we work specifically with asset-based lenders and non-depository lenders with the Build a Business method, which is the program through the domino effect. We offer financial literacy, education, and a lender network to help guide you so you're not spinning in circles looking for the right type of funding for you. So if you need additional help, go ahead and click the link in the descriptions below so you can speak with one of our advisors. Now, we also have a lot of free tools to help you get started. There is a checklist, Build a Business checklist. You can click the link and grab that free resource because you do want to start with a solid foundation. This is not something that you want to keep backtracking on, okay? There's a lot of different tips on how to get business credit cards and things like that, which is great. You know, it's good, it's available to you, but that's just one piece of the game. The ultimate goal that you're trying to get is larger types of financing so you can really grow and really scale. So we're talking about loans, term loans, asset-based lines of credit, so larger type of financing, $300,000 and above. So when we're talking about asset-based lending, okay, what does this mean? Well, it means that there's a number of different assets that can be utilized. A lot of business owners don't even know what they're sitting on. Okay, so that's why this is super important. I want you to go ahead and hit that subscribe button if you find this information helpful. And do me a favor, share it with a friend. Okay, because capitalism works and you own a business. So this is very, very, very important. There's a lot of different lenders out there, and it's difficult to know which one is going to be the best fit for you. So I want to share the core types of assets that can be utilized because they all work in a little bit of different ways, but you can leverage them to really scale and grow. So the first one is real estate. Pretty obvious, right? If you have real estate, you can use that as collateral. The second one is inventory. If you have any type of inventory sitting in a warehouse, third would be like machinery, equipment. What's up, guys? Third would be machinery, equipment, receivables. Okay, if you have receivables that are B2B, this is considered an asset, and most people don't know this. I have clients that are working with Home Depot, Walmart. I got a client right now that has a beverage company that she has a partnership with an airline and the cruise line. So you have other different types of assets. I worked with a lady who was working with Nordstrom, Macy's. So all of these types of different vendors, right, that you could be selling, working with. Now, ABL lenders will typically want to use the real estate that you're in. If you don't have real estate, then you can use any of those other assets. They're typically going to look at a combination of these. So they can look at your receivables, your inventory. They might look at your equipment, your machinery. You might even have to get an appraisal on the equipment. And some of these lenders are going to be banks, and some are going to got a call. Some of these lenders are going to be banks and non-banks. And you know what? Let me just put the do not disturb on. Boom. We can't be having people interrupt. Okay, this is gold. So basically, you can work with banks. You can work with non-banks. If you are working with banks, what will typically happen with a lot of companies that we work with, they get capped, right? So they'll get capped at the bank. They need additional financing. So that's where our lenders will typically step in. If you are a company that buys inventory, maybe you have clothing or any other type of product, we're working with a plastics company. So if you've got inventory, maybe you have inventory sitting in a warehouse. Let's say you've got like $5 million in inventory, and then you've got $5 million in receivables. Well, you combine that together, now you got 10 million. Okay, so make sure that you're keeping track of all of this, okay, because you don't want to get stuck at the last minute having to try to compile all this together. So make sure you're keeping really good records, and you're keeping really good records of who you're working with as well. But there are lenders out there that will finance like 80, sometimes 90%, 90% of the receivables. And so if you have a million, and you just think about that, if you have a million in receivables, you could get up to 800,000, 900,000, depending on the lender. If you've got inventory, they'll typically do like a percentage of that inventory. but it really just depends. That's why there's not a one size fits all situation. And you don't want to be stuck in a situation where you're just throwing spaghetti at the wall and applying everywhere. You want to understand how the process works. There's also going to be instances where you have to get that inventory appraised. Okay, so those things can take time. That's a cost that you would incur. Okay, so you're going to be paying for your appraisals. If there's any field examinations, and you would be paying for that as well. So with this type of financing, if you can't cover that, typically they'll ask for a larger amount that could cover some of those expenses. So when you're looking at an ABL facility, you could typically be asking for something much more because you have appraisal costs, you have all these other fees. So typically people are looking at like 1 million, 2 million, 3 million and above. Okay, so you need to be advised. Nobody's going to come in and take care of those expenses for you. That's a cost that you're going to incur. The lender's definitely not going to do it. So as you are growing and scaling your business, there's all different types of financing out there. If you have inventory, you can utilize your inventory. If you have equipment, you could do equipment financing. There's sale leaseback financing. There's all different types. There's invoices, there's factoring, there's all different types of asset-based lending. But the biggest thing that you want to do before you apply for any of these types of lenders or any of this type of funding is you need to have your documents together, your paperwork together, your bank statements, check your foundation, also check your debt schedule if you have other loans in already out. So if you have like other MCAs, sometimes people will use an MCA, which is a merchant cash advance, as a bridge, right? As a bridge to another capital event. If you have things like that in place, then make sure that you add up all your debts, your monthly debts, because that's going to be what they're going to look at, that to see if you can manage an additional payment. Okay, so what is going to be helpful for you is compiling all this paperwork in the beginning, because things move fast when it's time to apply, especially if you find a lender that's interested and wants to move forward with you. It's going to move. They want the documents. And then, of course, if you don't have it, it will slow down, delay the process. And one thing I have seen with companies is when you're not prepared and you start to drag that out, then you're going to be submitting updated financials. You're going to be, having to submit certain documents. So just make sure you have everything aligned. Okay. But all of these different ABL lenders, and there's a ton of them, there's a ton of asset-based lenders, they offer different amounts of financing, different deal sizes, for different types of companies and different types of industries. So it can be really difficult to navigate this all on your own, which is exactly why I've built the Build a Business Method, so that you can hop on over to the website, www.buildabusinessmethod.com, and you can connect with one of our advisors. You can learn the steps in order to prepare for this type of financing. If you're not yet ready and maybe you're starting your business, this is still the foundational piece that you need in the beginning. I've seen businesses that have been in business for like 5+ years that still had to go back and fix this when they went for this larger type of financing. So it's just better to take care of it right now. If you need help, click the links in the description below. And if you feel like you're ready, then go ahead and apply, and you can apply directly on the website, buildabusinessmethod.com. But any questions that you guys have, this was a great one that somebody sent in. So any questions that you have, shoot them on over. We read all of them. But that's how we provide the content on here to make sure that you can stay educated, getting all these questions answered. So if you found this information helpful, do me a favor, hit that subscribe button, click the links in the description, and share with a friend. And I'll see you next time.